And those days are over. Those days are over. And, I said before in our meeting with the new and very talented Prime Minister of Canada that we have some very big announcement to make. It's not about trade. It's about something else, but it's going to be a truly earth-shattering and positive development for this country and for the people of this country. And that'll take place sometime within the next few days.
Are you guys ready for an earth-shattering announcement coming today? What a choice of words. It almost makes you anxious about what's going to take place. I want to start off on that. People get a little bit disgruntled about the fact that we cover Trump and America so much, but the reason we do so is just because it is so important to the markets, and any progression in regards to the whole tariff situation, which he did just say it wasn't going to be about, or global trade, is going to affect the markets. And that's why I pay attention to it. And that I found his choice of language rather funny there. And I think generally Trump is an exceptionally funny guy. Some people would say offensive, depending on how you took it. I mean, I watched a number of things from his meeting with the Canadian president, and I've got to admit, I was chuckling the whole way through. Let's get into another jam-packed daily market update. We've got a lot to cover with you guys. We're going to be looking at the Central Bank of America, the Fed, quite heavily today. A lot of rumors or speculation, it's not rumors, kind of misinformation going around on Twitter in regards to the Fed now doing QE in the form of purchasing bonds. What's essentially happening there very quickly is bonds have a maturity. They need to be renewed or typically are renewed. And you've got a rolling off of those bonds and then a repurchasing of them. And that's why you're seeing the Fed make the largest bond purchase in a single day over the past 3 years. But Scott Bessent yesterday was in front of Congress and essentially said that the United States government will never default on its debt and they will raise the debt ceiling once again. All roads lead to continued proliferation, which is why you need to own assets. And I've got a couple of absolutely banger interviews with some special people on that subject entirely, certainly giving it a historic context in regards to money in the system that we currently live in. And then he also talks about CBDC. So we're going to be looking at that. We're talking about Citi are launching something very interesting. But let's focus on today's pressing matter. And that is, of course, the federal rate decision, which is taking place in exactly 5 hours and 56 minutes at the time of recording. There is a 95% probability that they do not reduce rates. And actually, that's rather likely in my opinion. The month following this one, so the next meeting is on the 18th of June, the probabilities are creeping up in regards to them lowering rates then. And for July, it's actually very probable that they do lower rates, even becoming perhaps more probable that they lower rates by 50 basis points by then than the chances that they don't do anything at all. So we are going to get an easing in monetary policy. It's needed. There's a lot of debt that needs to be rolled up. And I think any kind of confirmation of that, the markets do well under, just like they would do well under any kind of confirmation in regards to the tariffs being worked through. And I do think that's a obvious outcome. And ultimately, we kind of think the markets have got tariffs wrong. They're obviously pricing in what's been said, the literal implementation of Liberation Day. However, I don't think a literal implementation of Liberation Day is going to work or is practical or is going to be the end result. In actual fact, I think you're going to see lower tariffs across the board as a result of that. And that's quite a positive outlook, certainly for global trade, et cetera, et cetera. But whilst we're going through it, there is going to be some interesting things taking place. So this is taking place today. This is interesting. I think the forward guidance is going to be more interesting in regards to what the Fed say afterwards. It's pretty much dead certain, 99% certain that the Fed are not going to lower. This has actually just jumped up. The Fed aren't going to lower interest rates today. They're being slow. They need that room to cut moving forwards. But they're going to get, and already have got, a lot of excuses to do so now. I think this sees the market's benefit. Just quickly, a little bit of TA. You guys know my big plan when it comes to the cryptocurrency space. This is a weekly chart. This is still in a very strong uptrend Bitcoin. And we were looking at a continuation pattern. We've just had a concession of continuation pattern since this uptrend started, which is very common, in the form of a falling wedge. And I do think this plays out. I think you've ran into a little bit of resistance. A real catalyst for this could be what's coming later on today, and certainly forward guidance from the Fed. I don't know if the earth-shattering announcement is going to have anything to do with anything, but it's going to be interesting to see what that is and how the markets react, and that's why we cover this sort of stuff. We weren't just looking for falling wedges on Bitcoin, and it's kind of led the pack as you'd expect, but the total cryptocurrency market cap, the total 2, total 3, others, and crypto ETPs, along with a variety of altcoins. And I think really all you've done here is just ran into resistance. When you kind of start a falling wedge, you certainly in regards to the initial initiation of the move, what you tend to find is there's a lot of price action that came before it with that congestion, the pointing of the wedge. It can be quite hard to kind of break through that, or you'll find resistance, a lot of resistance at it. But generally, there's never been a better time to be in the cryptocurrency space. We've also looked at crypto ETPs like MicroStrategy, which seems to be moving in the direction we thought it would from down here. But you can see as this initially ran into resistance, pulled back, and then see continuation. And there's many altcoins out there, like AVAX, that are all exhibiting this falling wedge trait, and they're just running into double bottoming. You're going to see continuation out of this market, guys. We are unbelievably bullish. We're on the precipice of something monumental, and everybody is adopting cryptocurrencies. There's just a lot of uncertainty right now, meaning that markets aren't quite flourishing. But when there's a clearing up of that, I believe they will. Let's talk a little bit about what took place yesterday with Scott Bessent, who's an exceptionally intelligent individual. There was this circulating all over Twitter. Breaking, the Fed just spent $20 billion on 3-year bonds, their largest single-day purchase since 2021. So we're talking 4 years ago. They're injecting liquidity instead of cutting rates to avoid panic. Now, the Treasury perhaps is doing that and has been doing that with Yellen. However, really what's happening here is they're just replenishing their balance sheet. So they're not... The interesting thing really is that when those bonds run out, because how you issue money is through debt. That's how a central bank does it. They need to renew them. And that's really all that's going on here. And this year is a big renewal year, which aligns with the 4-year cycles. There's a debt cycle that kind of underpins market cycles more broadly. Business cycles like PMI, et cetera, et cetera, et cetera. And we're going to continue to witness this year a lot of refinancing of debt. And that's an issue. And I want to play you guys a clip of what Scott Bessent had to say about all of this. And what it shows is, despite an effort to reduce debt in the United States, that you have to do that in a measured approach. And really what we're going to see is more monetary proliferation, certainly via increasing debt and ultimately money supply. So let's dive into what Scott Bessent had to say on this matter specifically.
The United States government will never default, that we will raise the debt ceiling, and Treasury will not use any gimmicks. We will make sure that the debt ceiling is raised.
And that says it all. And that's why we're ultimately an investor in assets, because we understand the great game that is being played on everyone in the form of the monetary system and its inflationary nature. I've got another clip that I want to share with you guys very quickly of Scott Bessent yesterday when he was asked about CBDCs. And he says, we're not going to do a central bank digital currency. We're going to let the public sector do it. And the US has to, going back to the debt issue, introduce a purchaser to that market. They're going to do it in the form of stable coins. They're going to democratize dollars globally and make it easy to access and dollarize the world to more of a degree. That could even be a scenario where they end up issuing more dollars, more liquidity comes into the system, which does see the dollar go down. But due to the kind of nature of it, already being the world reserve currency, we see that kind of increased adoption. So there's multiple paradigms going on here. But he was asked yesterday about CBDC, and he said, no, we're going to leave this to the public sector or the private sector. And we need to find the cryptocurrencies, the distributed ledgers that are going to enable that, because that's hundreds of trillions of dollars or trillions of dollars that are going to be flown online, tens of trillions in terms of tokenized assets. And, they're ultimately going to do something extremely interesting, the kind of switcheroo with the bond market. So let's dive into this clip.
We believe that digital assets belong in the private sector. And my personal view is that having a central bank digital currency is a sign of weakness, not strength, because really the reason, if there is a reserve, say a reserve manager or a foreign central bank holds US dollars, then there is a wide variety of US assets they can invest in. You would create a central bank digital currency just for ease of use, because there are no good choices for underlying assets.
And so you're saying you would not be in favor of the Federal Reserve issuing such a currency?
No, sir.
Stablecoins are one of the biggest narratives when it comes to the cryptocurrency space, and we really need to pay attention and spot the ones that are going to play a front and center role. And I think it's quite obvious. You know, we already have many of them working with the CFTC so far. I want to talk about BlackRock a little bit. The topic of BlackRock's most recent letter to investors, Larry Fink's most recent letter to investors, was democratization through tokenization. And Citi are well ahead of that. Citi plans to tokenize private companies, so not publicly traded companies, on 6 digital exchanges. So one thing I've seen is that with cryptocurrencies, you enable and open up entirely new markets and opportunities. And Citi are leading the way on that. You know, they're looking to introduce this to 6 digital stock exchanges. But what you're going to find is, let's say Allincrypto grows to the biggest media channel in the world. And that's the plan, by the way. And hopefully you guys can get me there. We could then tokenize our company and almost IPO with it. Of course, it would be security, and there'd be security laws that go with it. But if you think about the amount of companies out there that are extremely successful, that could always use access to capital, that's now being enabled by the cryptocurrency space, and the opportunities that come out of that are massive. And I'm talking very selfishly here in the West, but if you look at a developing company and there's something successful, or there's perhaps minerals or some sort of rights or whatever it is, you know, you entirely open up new markets across the world through tokenization and really bring the world into more of a global state. And Citi are heading this up. It was the theme of Larry Fink's letter to investors. Of course, we reviewed, and of course they did speak about crypto more broadly, Bitcoin, but more so tokenization. So today's going to be interesting. Let's see what the Federal Reserve come out with. We're still exceptionally bullish technically on the cryptocurrency space. I don't think we can call what the Fed's doing QE in regards to purchasing bonds back. It's going to be interesting to see what they have to say after their decision on rates. Scott Bessent sort of really talking about the ultimate path for debt and money, and that is continued proliferation, which is why you want to own assets, otherwise you're climbing up a greased pole. And of course, they're not going to issue a CBDC. It's going to fall into the hands of the private sector, and there's a major opportunity there, just like there is going to be with tokenization more broadly. That's it from me, guys. I'm going to love and leave you. Hang in there. I know it can get frustrating being a cryptocurrency investor because of the day-to-day chop and volatility and lol, but you will be rewarded. That's it from me, guys. I'll see you all soon.